Marifa.
Islamic microfinance in Malaysia. Microfinance institutions in Malaysia are highly supported by the government. They are subsidized and offer restricted products, and often deal with lending contracts that are standardized rather than those compared to the Grameen Bank and BPR, which have flexible lending contracts and a variety of products. Since these banks are unsubsidized, they are required to provide a diverse range of microfinance products and services in order to generate revenue, which in turn is used to cover operations and loanable funds. Malaysian microfinance institutions, therefore, do not have incentives to diversify due to the immense support from the government. According to statistics, microfinance clients have an impressive repayment track record and a capability to develop their micro-businesses. In Malaysia, clients of Amanah Ikhtiar Malaysia, AIM, have shown a repayment rate of 95%, with relatively higher revenues courtesy of their business activities. A handful of policies and programs have been created since 1970. The new Economic Policy, NEP, National Vision Plan, Amanah Ikhtiar Malaysia, Tekun, to name a few. The main aims of these programs are to alleviate poverty, restructure communities, and establishing a sustainable economy, and they have shown progress in achieving their overall goal of reducing overall poverty rates in certain areas, including urban and rural areas in Malaysia. The poverty reduction rate, PRR, lies in the range of 61% to 77%. This was made possible as a result of the poverty-oriented programs implemented and policies enforced by the government and a few NGOs. Amanah Ikhtiar Malaysia, which emulated the Grameen Bank model, has witnessed success through the last 3 decades. It has managed to span 6,700 villages, covering 123 branches with a recovery rate of 99%. Although poverty alleviation in Malaysia has been in operation for many years, challenges and related issues often crop up. Poverty-oriented institutions offering microfinance products fall short in terms of reaching a sizable number of the poor. Majority of the potential customers seem to lack business education and the technical know-how when it comes to managing their business operations. There exists a lack of correlation between Islamic microfinance and digital tools that could aid the promotion, marketing, and innovation of products. Digitization could propel a wider outreach, ease administrative burdens, and lower costs of business operations. Areas to improve upon. Microfinance institutions, both government-backed and otherwise, need to be responsible for educating the industry with the notion that microfinance customers are equally creditworthy and should be considered in product innovation and development processes. Sharia-compliant products in the microfinance field require further diversification, and an exchange of ideas in the industry is highly relevant. Islamic microfinance institutions need to modify its deposit products as per customer preferences, and also mobilize funds via partnership arrangements of financing or modern equity. Following the major problems of financial illiteracy, Malaysia's microfinance institutions have set out to provide business and finance educational courses for the benefit of the customers. Although it is a positive step, many borrowers complained of the selection criteria applied, seasonal training schedules that are not fixed, and the inconvenience of locations chosen. The institutions do not practice a standardized method of training to handle customers of different backgrounds, and so it was highly recommended that the government and responsible authorities redesign its programs to ensure effectiveness and efficiency.
Marifa.